it's the last Sunday of the year. Next Sunday will be the 2nd of January, so it'll be the day after New Year's. So on the last Sunday of the year, I like to, and I have been doing this for many, many years, is to review what happened in financial markets and politics in the current year, and then give you my forecast on what I think may happen in 2022. Now, I used to be pretty good at this, but the last 5 or 6, 7 years, I haven't been as far as the predictions go, because markets aren't real anymore. You know, they're being stimulated by printed money. It's all based on what the Federal Reserve does. So a lot of my forecasts have been off because markets don't trade the way they should based on the facts. But let's go first with the 2021 review. Let's talk finance first. Well, the big story in 2022 is inflation. And we haven't talked about inflation as being the big news in finance in the 21 years I've been doing this program, because it hasn't been. Oh, we've had inflation before, you know, but not to the extent that we're seeing now. We haven't seen this kind of inflation in 40 years. Since Jimmy Carter was president in 1980. So inflation is affecting everybody. It's affecting everybody's pocketbooks. And it has been persistent, and it's been across the board. We've seen inflation of everything. We've seen inflation of energy prices. Drives a lot of stuff. Energy gets into everything, every manufacturing process, shipping, trucking. Energy is involved, heating our house, driving our car. Energy impacts us probably more than any other commodity. And we've seen major inflation in energy. Also food. We're seeing incredible inflation in certain meats. We're seeing it in certain types of groceries. We all know it. And that's why you can't sugarcoat economic statistics when you talk about inflation, because Americans know it. We take the money out of our pocket and we buy things. So we know when something's more expensive now than it was 3 months ago or a year ago. And inflation was the number one story, and it's still going to be the number one story in 2022, I believe. And I don't want to get ahead of myself on there. Another big problem this year has been the supply chain issue, which has not improved. If anything else, it's gotten worse. And I don't see that repairing itself until mid-2022 at the earliest. And as long as you have supply chain issues, you're going to have inflation. And it was a perfect storm for inflation. You know, you got you have the Fed printing money like crazy. You have supply chains tightening up. So it's a perfect inflationary storm. We have more money chasing fewer and fewer goods. And that's what causes price increases. And as I've taught you on this program in the past, inflation is not necessarily the prices of things going up. That's the result of inflation. Inflation is expansion of the money supply. And the money supply, the M2 money supply that the Fed puts out, is up 45% since 2019. I just think about that. A couple of years, the money supply is up almost 50%. And at the same time, you have tightening supplies because of all the supply chain issues due to COVID. And that's a perfect storm for inflation. And prices are rising. We all know it. And we'll see if the Federal Reserve, can do anything about it. They're talking a good game right now. But interest rates are still at zero, and for 2021, the federal funds rate was 0 to 0.25%. That's the beginning of the interest rate food chain, is the Fed funds rate. And it drives everything else. So the Fed has done nothing to quell inflation as it has been accelerating. And that's what we're seeing. Every month now, the monthly month-over-month figure is going up at a higher rate than it has earlier in the year. So we have an accelerating inflation issue. And the Fed has the decision to make. A, is it going to cut back on its bond purchases, which is called tapering? Whenever you hear the word taper, it doesn't mean raising interest rates. It means just slowing down the printing of money. Because what the Fed has been doing is been printing $120 billion a month. And then what they've been doing is buying our treasury bonds with that money. In essence, financing the federal government deficit. Also known as monetizing the debt. And monetizing the debt is inflationary. It has to be. Because the Fed creates money out of thin air, in this case $120 billion per month, and most of us can't grasp how much money that is. A billion's 1,000 million. So the Fed is printing 120,000 piles of $1 million a month. And you wonder why there's inflation? That's crazy. Now they say they're going to start dropping it at $30 billion a month, starting I think in January. We'll see. Because the Fed, they're between a rock and a hard place. All right? They have two options here. They could, really say, we mean business here. We're going to fight inflation. We're going to taper down to zero by June. And then we're going to raise interest rates 3 times later in 2022. If they do that, they may bring inflation down. But at what price? And I'll tell you, my predictions on the markets and everything are going to be based on what the Fed does, not what they say they're going to do. And that's the great unknown here going into 2022. Maybe the Fed just wants to keep inflation from getting really out of control, but it doesn't want to, tank the economy and the market, so they try to thread the needle here. Say, okay, yeah, we're satisfied with 6% inflation. We just don't want it to get to 15%. So if the Fed really wants to quell inflation and bring it back to 2%, it's pretty unlikely they're going to do that. Because sooner or later, if it looks like they're going to do that, or if they start doing that, you're going to tank the stock market. And once the stock market tanks, the Fed's going to say, wait a second, we can't do this anymore because the markets are tanking. And we can't be responsible for destroying the economy and putting us into a recession. So we're going to go back to our quantitative easing or money printing and damn inflation. That's what I think is going to happen. I think they're going to say, okay, let's try to do this, but once the markets take a tantrum, and I'm talking multiple markets would take a tantrum. The stock market certainly, because the stock market has gotten to these ungodly levels, these overvaluations we haven't seen since 1929, for only one reason, is because of the stimulus of monetary printing, monetary expansion. It's found its way. That money's got to find a home somewhere. When money is printed and injected into the economy, it's got to go somewhere. And it's found its way into risk assets, whether that be real estate, whether that be stocks, at any valuation. But I think the second scenario is probably the way they're going to go. They're going to try to keep inflation from becoming hyperinflation or just an extreme inflation problem, and just try to accept that we're going to have to live in inflation of roughly 6% official, 12% unofficial. Or I should say 12% real inflation. And that's the way central banks historically have worked. They'll opt for inflation over tanking markets in the economy because it's the lesser of the two evils. But are people prepared to live with 4, 6, 8% inflation for forever? No, they won't. And they can't, and it's unsustainable. So the question is, can the Fed thread the needle? And I don't think they can. So the Fed's between a rock and a hard place, and everything for 2022, as far as markets performance, the economy, are all going to depend on what the Fed decides and how they react to crises, because there's going to be multiple crises. Whether it's a crack in the stock market, whether it's a new deadlier variant that comes along, or maybe we have a negative GDP print and the country's falling into recession. And by the way, the economy is slowing right now. It is slowing significantly. And as we go into 2022, a lot of economists are lowering their GDP projections to pretty low numbers. And that may go negative. A lot of that will depend again on what the Fed does and what inflation does. So let's talk about wages. Wages have gone up in 2021, roughly about 3%, but that's not a good thing because inflation is 6% officially. So if prices of everything are going up 6%, but you get to bring home 3% more, you're still losing 3%. So wage inflation is not keeping up with price inflation. So people are going backwards. Cost of living adjustment on your first Social Security check in January will be about 6% higher. The highest increase in 40 years. But then again, so Social Security, Medicare Part B is going up. That's going to eat part of it. And it's really not good to see large cost of living increases because that means prices of everything are going up. And chances are your other sources of income besides Social Security did not have a cost of living adjustment. And since Social Security only makes up for most people about half of their income, that means the rest of their income, the other 50%, isn't keeping up with inflation. Stock market shrugged off everything this year. New variants, supply chain issues, and wound up with closing at least Friday at a record high. Not Friday, Thursday. Where most market indexes are at record highs. Market, I think the stock market's up something like 25% for the year. Just incredible returns. But stock prices now have gone to levels that are just so expensive and so fraught with risk to the downside that anybody coming in here now and buying the market really has to have their head examined because there will be shocks to the market. And I think shortly after the new year, we're going to see the first one. Real estate had a great year. As we know, real estate's been on fire. Many homes sold this year in just a day or two. Many homes sold above the asking price. We've seen bidding wars for many houses. We've also seen investors, big and small, buying up real estate as an income source. So many buyers were competing against hedge funds and all cash deals. Now you come in there and you're contingent on getting a mortgage. You're not getting that house because there's going to be enough people coming in there with cash that why wouldn't you take a cash deal? Why would I want to have a contingency and wait for you to get your mortgage approved? BlackRock wants to come in here and buy this house. I'm listing it at $350. They want to pay me $400, and they want to pay me cash. So now you have competition for home buying, which we haven't seen before, at least not to this extent. So real estate's done very well. Also, we've had low interest rates, which is a very big driver of real estate prices. Mortgage rates for part of the year were under 3%. They're slightly above 3% now, but still historically low. So stock market investors did extremely well. Savers were busted again, meaning that conservative money struggles to make a return. CDs, savings accounts, lucky if you can get a 0.5%. Treasury bonds, 10-year Treasury yielding right now at 1.45, something like that. Yeah, go ahead. You want to lock your money up for 10 years? You want a 10-year CD paying you 1.43%? Buy a U.S. Treasury bond. In an environment that sees 6 to 10% inflation. Another thing that 2021 shown for the first time is the lowest negative yields we've seen on conservative money. What do you mean, Lou? What's negative yields? Negative real yields are when you take out inflation. So, you make 1.5% and inflation is 6%. You lost 4.5%. You're negative 4.5% return. Never before in history have we been this low where the real rate of return on a 10-year Treasury bond is minus 4.5%. Now you take a savings account and the real rate of return is minus 6. Again, these are using the fudge CPI numbers that the government puts out. You want to put the real ones out, double that. And the thing is, on a negative year like that, even if we have a zero inflation rate next year, that means you still lost a 4.5 to 6% in purchasing power permanently. Unless you have deflation where it goes backwards, you're never going to gain that loss of purchasing power. That's why inflation is so insidious. It's not just insidious because you go to the store and you got to pay more for a steak. It means that your overall savings has declined in value and purchasing power. Late in the year, the Congress raised the debt ceiling, which allows us to borrow more money and go further and further into debt. In 2021, the national debt stood at the end of 2021, $29 trillion. And Congress pushed through a $2.5 trillion increase in the debt ceiling. And you know they'll spend every dollar of it. And we'll go further and further into debt. And that's why, again, if the Fed's not there printing money and buying our bonds, the market has to buy them. And the market does not want a 4.5 negative rate of return. The market's going to insist on higher yields before someone is going to commit their capital. Look, the Fed isn't committing anything. They're printing money that they don't have. And they're buying treasury bonds. That's a little different than you and I taking our savings and putting in a 10-year treasury bond. They don't care on the rate of return of money they just created. But you and I do, or foreign investors or anybody else will have to come up to the table to buy our debt. And we're going to have another $3 trillion plus deficit for fiscal year 2021. I think it was something like $3.5 trillion deficit. It wasn't long ago that our entire budget was $3.5 trillion. Now the deficit's $3.5 trillion. The deficit alone. And that's not going away anytime soon. Let's shift over to politics. Biden's first year in office was nothing but a disaster in so many ways. The Afghanistan withdrawal has been universally condemned. Leaving behind Americans, leaving behind Afghans who helped us, leaving behind $80 billion of equipment. I mean, it was a total disaster. Biden, when he came into office, said his goal was to stamp out COVID. COVID's worse now than it's ever been as far as new cases go. Like I said when I opened the show, I've never known so many people with COVID as I do now. 2 years into a pandemic. This is when things should be going away. And now we have the fiasco on testing. People are waiting days and sometimes 5-6 hours in line to get a COVID test. Now this may lighten up after the holidays. I think a lot of people wanted to get tested before Christmas gatherings. Who wants to be responsible for getting grandma sick? Right? So I think a lot of people wanted to get tested. A lot of people now have been exposed to people who've had COVID, so they're saying, I got to get tested before I have Christmas at my house because I was around Joe, and Joe now has a cold, and he said he tested positive for COVID. So that may ease up a little bit. Now Biden came out and said that he is authorizing the government to buy $500 billion test kits or something like that. Although he gets mixed up between pills and tests, and that's another thing. 2021 saw, I thought, a significant decline in the cognitive abilities of the president. And I don't say that in a mean way. I'm just saying the guy is an 80-something-year-old person who's got obviously a decline in his mental acuity. It happens. Should he be president of the United States under that scenario? Of course not. But he had an interview this week. Now, there's a reason why Biden doesn't do many interviews and his handlers try to keep him away from the press. But, you just can't avoid it forever. But, he always makes a gaffe here. So listen to Biden. Now, he's talking about, he just spent, I think the day before, talking about 500 billion test kits he's going to send out. But he talks about pills, test kits. He keeps getting confused.
You told the American people just yesterday that we are prepared for what's coming. But 3 days before Christmas, if you look out across the country, you see it everywhere. These long lines, people waiting for hours outside in the cold just to get tested. Empty shelves, no test kits. Is that a failure?
No, I don't think it's a failure. I think it's, you could argue that we should have known a year ago, 6 months ago, 2 months ago, a month ago. I ordered 500 million of the pills. 500 million pills. 500 million test kits that are going to be available to be sent to every home in America if anybody wants them. But the answer is, yeah, I wish I had thought about ordering 500 million pills 2 months ago before COVID hit here.
So he did it twice. He called it 500 million pills. And look, we could spend the whole show doing snippets of Joe, getting confused and not knowing what he's talking about and so forth. But bottom line is that we have a president who has major health issues. And he mentioned it for the first time. They asked if he was going to run again, and he says, if he's healthy, he will. And a president doesn't say that. You don't bring up your health. You just don't do it. You say, yeah, it's my intention to run, and then you deal with it later on if your health isn't good. But to even throw that out there is just basically saying that, no, I'm not even going to make it to the end of my term, let alone run again. We'll play that snippet later on in the show. The last defeat and a big one for Biden was Joe Manchin coming out last Sunday while this program was on the air, coming out saying he will not vote yes on the Build Back Better Biden socialist program, multi-trillion-dollar bill. And once he did that, that really freaked out a lot of the people on the left in this country, because there's so much packed social stuff in there, environmental, Green New Deal, money for journalists, and all kinds of stuff. But at least we have one person who understands the inflationary problem we have. Now, the administration wants you to believe that, a $2.5 trillion, it's not even $2.5 trillion, it's more like 5 to 7 when you look at it, properly, is good for inflation. It'll stop inflation. I mean, you want to talk about Orwellian talk, where it's just the opposite? Printing 2.5 to 5 trillion more dollars, injecting it into this economy when inflation's out of control, is going to tame inflation. I mean, it's really, when I say Orwellian, they used to say in 1984, war is peace. So basically what they're telling you is up is down, black is white, that kind of thing. So by printing money, we are going to be able to stop inflation. Now, I'm sure that had a lot of economists laughing and rolling around on the floor. So it was a pretty bad year for Joe Biden, and you could even, and when you look at inflation also, I mean, the inflation issue is one that now even CNN, MSNBC are even acknowledging his numbers on the economy are horrible. And this is something you don't hear too often from CNN or MSNBC.
Terrible. Look historically. Look, we can look at the net approval ratings on the economy since 1977 at this point in a presidency, and that's the approval minus disapproval on the economy. Look at Joe Biden in 2021. Minus 15 points. He's well underwater. That is even lower than Jimmy Carter was in a CBS News New York Times poll at the beginning of January 1978 when he was at -8 points. You can see that Biden's even worse than Trump and Obama were, and they were in the negative territories at -4 points. When it comes to the economy, there is pretty much nothing good that can be said about Joe Biden's numbers when it comes to the American public.
You brought up the Carter comparison there. What more do you have on that?
Yeah, look, here's the deal. Why were both of them so down in the trenches? And what you can see is if you ask folks about inflation, is inflation a serious problem or concern? 84% of Americans say, yes, it is right now. Back in December of 1977 under Jimmy Carter, it was 79%. Inflation is something that can sink a presidency because it's something that is felt by everybody. It was something that sunk Jimmy Carter. And at this particular point, although Joe Biden obviously has time to make it up, it's one of the big things that's keeping him right now in the gutter.
It is worth noting, by the way.
All right, so there, you don't hear that out of CNN or MSNBC too often. They usually are cheerleader for the president, and they don't really touch subjects like this. But you'll see when we talk about the 2022 predictions why I think that the left-wing media may be abandoning Joe Biden. All right, let's take a break. On the other side of the break, we're going to tell you my forecast for 2022. That should be interesting. My name's Lou Scatigna. Down the line.